Welcome to Alpha Insights. I'm Harper. Today we're unpacking what matters for utilities and clean energy over the long weekend. And I have Drew with me to help make sense of it. Remember, if you have questions as we go, you can ask us at stockalpha.ai.
Thanks, Harper. Great to be here.
Quick housekeeping before we dive in. US stock markets were closed today. So when we talk about market implications, we're looking at developments heading into the long weekend, with the last trading day being Friday, January 23rd, and markets reopening Monday, January 26th.
That's an important point. News can land while exchanges are closed, and that shapes the conversation when trading resumes.
Okay, big headline. A federal court ruling preserved $5 billion for the National Electric Vehicle Infrastructure Program. Walk me through why that's a big deal for utilities.
Sure, that $5 billion is federal support earmarked for building high-power EV chargers along major corridors. For utilities, that creates clearer visibility on future demand. Not just more electricity use, but concentrated loads at charger sites that often need distribution upgrades and sometimes substation work. It also accelerates interconnection discussions and gives utilities potential new revenue streams from hosting and operating chargers.
So does this mean utilities are suddenly going to boom?
Not overnight. The ruling removes a big policy uncertainty, which is constructive. But the money still has to flow through state plans and procurement. Expect a pickup in planning, more applications in interconnection queues, and proposals for high-power stations near highways. That activity matters to utility capital plans over the next few years.
Got it. Now on the risk side, the Department of Energy warned grid operators to be ready for Winter Storm Fern. How should investors think about that?
Winter storms test grid resilience. The DOE advisory suggests operators may need to call on backup resources, and there could be localized outages, conservation asks, and restoration costs. For investors, watch utilities with known weather exposure or aging systems. Near-term earnings can be hit if big restoration spending isn't recoverable through rates or insurance. But these events also highlight why investments in reliability and fast response capacity are increasingly valuable.
You mentioned electricity demand shifts earlier. Could storms like this change the long-term story around electrification?
They can influence public and regulator appetite for resilient spending. If customers see repeated outages, regulators may be more willing to allow utilities to invest in hardened infrastructure, microgrids, or faster restoration capability. That supports long-term electrification, but it also increases near-term capital needs and the debate over who pays.
Switching gears, there were some industry moves in solar, a software integration, apprenticeship programs, and an installer becoming employee-owned. Why do those matter?
These are the kinds of productivity and workforce signals investors like. A design software linking directly to racking and bill of materials workflows reduces soft costs and installation cycle time. Apprenticeship programs shore up skilled labor, which has been a bottleneck. And conversions to employee ownership can improve retention and alignment. Together, they make deployments more predictable, which matters for developers trying to hit tax credit or policy-driven timelines.
On the legal and regulatory front, there are fights over EPA rule changes and state measures. How risky is that for utilities and generators?
Regulatory uncertainty is still elevated. Court challenges to rollbacks of pollution rules could change retrofit costs or force retirements for water-dependent coal plants. And state-level measures that alter climate or affordability rules can affect planning and cost recovery. Investors need to track legal outcomes because they directly affect capital allocation and operating expense assumptions for generators and utilities.
There was also an opinion piece criticizing Tesla's strategy, suggesting they're moving from selling driving experiences to selling autonomous or parked vehicle services. Why bring that up here?
It's cultural, but relevant. If EV demand narratives shift from an emotional appeal to a service-based model, that can change rollout patterns for charging and the types of chargers in demand. It's one more variable investors watch when modeling EV adoption and charging infrastructure needs.
If I'm an investor listening in right now, what should I be watching before markets open Monday?
Monitor weather updates and any DOE or regional operator advisories tied to the storm. Track state NEVI plans and Department of Transportation guidance on how funds will be allocated. Look at interconnection queue activity and proposals for high-power chargers near major routes. Keep an eye on any court developments around pollution rules or state ballot measures. And for solar, Watch for announcements from developers about faster permitting or cost reductions tied to software and workforce moves.
Last quick practical question. How should listeners position themselves in the utilities and clean energy space right now?
Be selective and think longer term. Short term volatility is possible because of weather and legal headlines, but structurally, electrification and distributed resources are multi year trends. Favor companies with strong execution, clear exposure to charger hosting or grid upgrades, and reasonable balance sheets that can handle weather driven costs.
Great. Let's wrap with a few quick takeaways.
First, the preservation of $5 billion for EV charging is a meaningful positive. Expect more planning and interconnection activity. Second, Winter Storm Fern raises near-term operational risk. Follow DOE and grid operator advisories closely. Third, solar tech and workforce moves reduce soft costs and improve execution odds, but regulatory and legal fights keep uncertainty elevated.
Perfect. If you have questions about anything we discussed today, you can ask us directly at stockalpha.ai. We answer listener questions live. And for more market insights, head over to stockalpha.ai. Thanks for listening, and we'll be back with more after markets reopen Monday.